So we have a lot of concern because of Ukraine war and rising interest rates and so-called Fed tightening and that economy likely slowing economy. How can the stock market go gangbusters in a slowing economy? And I just want you to see this, step back from it for a second, because the one is really a misrepresented question. What moves stocks is whether things in the future, in the next approximate 3 to 30 months, will be better, whatever that means, or worse, whatever that means, than what people had immediately previously been expecting. It's about expectations versus actual realities. So if it's bad, whatever it is, but not as bad as people thought, market will go up. If it's bad and worse than people were expecting, market will go down. If it's good to great, but not as good to great as people expected, it'll go down. It's all about expectations versus reality. So once we get to a world like we have today, where everyone's broadly expecting a slowing economy anyway, all you really need is the economy to do a little better than that while still slowing. And you get the natural tendency to rise anyway. We have a very long history of the economy accelerating, slowing, in a decelerating way, turning into actual negative GDP numbers for a quarter or two, or a long formal recession to worse. And in all of those environments, within them, we have the economy moving and the stock market rising or falling. And we can see a very long history of the fact that it's about the prior expectations versus the future realities. So your question has to always be, is it going to be a little better or worse than what people think? Maybe a lot better or worse than people think? Because if it's going to be a lot worse than people think, well, then maybe you get a recession and bear market. If it's going to be a lot better than people think, then you're going to have a buoyant, rousing bull market. And if it's a little better than people think when they think it's going to be bad, and still going to be bad, but not quite as bad, you still get rising stocks. That's the way this really works. It's not about absolutes. It's about relatives of expectations versus future realities. Thank you very much for listening to me.
Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.